Hello, Maverick traders, and welcome out to your weekly currency room. This is Sonkit here, and I'll be breaking down what happened in the market this week. I mean, there's a lot to talk about, and we would talk about what's going to happen and what's our outlook for the upcoming week ahead. As always, let's get into it. As we take a look at the markets, we're going to start from the broader market analysis, take a look at what happened, take a look at then the news analysis, take a look at what happened in the currency baskets, take a look at some news, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Before we start, just a quick announcement. I know a lot of you have already coming for the summit. I was just told that there's just a few seats left. So I just wanted to give a quick shout out that if you are interested, join us. We'll be meeting just in a couple of weeks. We'll be meeting in Vegas for our summit. Again, mostly we'll be talking about the AI, mostly as how can we use AI in our day-to-day analysis and in your trading. How can it help you? So we'll be talking more about it. If you have any questions, let us know. Let's get into this last week. I mean, what a week! And if you have, anybody that has only started trading in the last few years or in the last, less than 5 years, this is new. Because we are seeing the kind of price action that we saw back in March 2020. And everybody know what was happening at that time. It was COVID. So the markets plunges lower. We are down, I think, as I'm recording this class before the market close. We'll see what the final numbers are at the market close. But I think right now we're sitting about 8.5%. So that's a big percentage move down in the markets. So if we take a look at where we are, so this is the biggest sell-off since March 2020. So if you're interested on how this price action plays out, go back in that time frame. Also, VIX. VIX is the volatility index, and that's at the highest level since August 5th of last year. So remember what happened with August 5th last year, where we had a massive move in the markets, in the Japanese yen. A lot of things happened over the weekend, and the market opened up on Sunday. The huge volatility. That's the kind of volatility that we are seeing right now. So in this environment, well, what are we seeing? We're seeing the Aussie and the Kiwi. They are the one that's plunging lower. First of all, they are those safe, the riskier currencies, so they get hit the most. The tariffs that were introduced on April the 2nd, that's what really caused or started this market move. Markets were not anticipating or pricing in the severity of that of those tariffs. So I'm sure everybody is already know about it, searched it. The way they calculated those tariffs. They are not the true sort of reflection of how the tariffs are charged. As we were told, they're reciprocal tariffs. So again, that is what caused a lot of that move. And then just this morning, at 6 a.m. this morning, we had China that come out and said they're going to be retaliating with the same tariffs. I think that was like 34% or 37%. They'll be slapping that on the U.S. So you can see that this is now a big escalation, and we are talking big numbers here. So that's what really caused the second wave of selling. We saw the first wave of selling that April the 2nd. Now we're seeing a second wave of the selling as we are seeing this trade war sort of, ratcheting up. Now, as we take a look at the bond yields, with all this volatility, bond yields that, dropped to the lowest level since September 2024. And another interesting thing, and markets have kind of done this over and over in the past few years where, markets sort of get ahead of its own move. And we're starting to see a lot of movement in the bond markets as traders started to price in, a lot more aggressive rate cuts. And we had the Fed Chair Powell that just came out early in the day, and he just said, well, we are not in a rush to make any changes to the policy. So we all kind of know that the Fed has said that many times, but the markets sort of started to put the bets that they will be cutting rates. So that was caused a lot of movements because everybody was expecting they will be cutting rates in May. And then they, after the statement, everybody's now pushing that deadline till I think June. So that's what's really going on. If you take a look at the outside of that, the economic data, the U.S. economic data was better than expected, I would say. We had the jobs report today, good numbers. We had the ADP numbers. Everything was sort of good numbers out of the U.S. And that's one of the reasons why Fed can really cut. If the numbers are good, they are not, they have two mandates, and they're not really required to sort of make changes unless, we see the unemployment sort of ticks up. And that's really not the case. We had a very good, strong jobs report today. We also had the RBA that actually held rates. So no changes, no surprises from RBA. Let's take a look at the news calendar. And, like I said, a lot of this news got overshadowed by the broader markets. So let's just take a look at some of the important numbers. Again, RBA held rates steady. We had the ADP numbers that were strong, but look at the jobs report today, 228,000 versus 137,000. A little uptick in the unemployment rate, but overall, as you can see, it was a good jobs report. Out of Canada, actually, the jobs report was actually negative. So they lost 32,000 jobs, and the unemployment stayed at 6.7%. So after that number came out, I think the chances for the Canada rates I think went up in the next meeting. So a lot going on, but I think the broader markets is really where a lot of the focus is. So let's just take a look at last week reviews and take a look at those numbers. As you can see that these numbers are quite large. S&P down 8.31%. World Stock Index down 8.29%. Surprisingly, crypto didn't have a big move. But outside of that, gold had a 2% drop. We have oil that had a 10% drop. So if you really, it doesn't matter what you are trading, everything had a massive move. It's a gold or it's the platinum or it's the copper or it's the silver, like you name it. Everything had a massive move across the board. So another thing we take a look at, in the chart here, as you can see that this is a very ugly chart here. Plunging lower, we're kind of holding steady. Everything was normal until this candle, but then today's candle is even more worse than the previous candle. So we're just seeing the momentum sort of picking up a little bit. As you can see that depending on, we'll see how the market closes today, but by the time I took that screenshot, we were sitting at the lows of the day. So it doesn't look like market will bottom out today. Generally, markets don't bottom out on Friday. They usually kind of bottom out. A lot of times we see these bottoms happening Sunday night, Monday morning. I think what I expect, and you can go back and I think a similar thing happened in August last year as well, where we had a massive gap on Sunday night open, and that gap was the capitulation where things start to reverse. So that's what I'm kind of looking for, that kind of price action. But based on this price action, I think there's more downside likely. Now, if you are looking at these numbers, and I'm sure everybody's sort of kind of surprised because, we haven't really seen a board like this for a long time, where a lot of the moves, we're not talking 2% move. We're talking about 4% move. Aussie down 4.38%, Kiwi down 2.26%. Yen is up 2.80%. We have the dollar closed up higher. Swiss franc actually did the best at 3.1%, and I think that was the biggest move in Swiss franc since 2015. Canadian dollar did well. Pound was mixed, and euro did really well. So you can see that, like outside of these Aussie and Kiwi, everything kind of did okay. And that was really the theme. That's really where the selling pressure was. Now, taking a look at crypto markets, you can see that things were just not moving. So let's not wait too much time on cryptos and take a look at those big moves that are happening in the currency market. So let's just jump into a market analysis and take a look at what's our outlook going to the next week. Now, going to the next week, like I said, everything kind of looking weak here in the markets. This is the S&P chart. We just looked at it. We can take a look at the bond yields. You can see plunging lower. Crypto, we are not really seeing a plunge there, but everything's sort of looking pretty weak. Now, here we are with the calendar for next week. Question is that how much of that number is really going to matter if we see a broader volatility like this? And, just like today, we had a very good job support, but that was mostly ignored because, again, broader markets are really what's moving the moves across the board. So until or unless volatility dies, I think these news events will have less of an impact. But the bigger one to next week is the RBNZ. They're actually expected to cut rates by 25 basis points. So that's the one to watch out for. We have some inflation number out of the US, CPI, we got the PPI, and we got the consumer sentiment. So next week, again, going to be more focused on the US data. But early in the week, since we don't really have a whole lot on the calendar on a Monday, but I think I want look for those capitulation setups on Sunday night and Monday, especially if we see a gap lower on a Sunday. We want to see how that leads into the Monday session here. Now, that's what I'm really looking at. I'm looking at that market capitulation before turning higher. Otherwise, as long as we are not showing that kind of price action where it wants to turn higher, I think we need to capitulate before that happens. We might continue selling off. I mean, who knows? This is sort of an uncharted territory for a lot of traders because, we are seeing moves. We're seeing this environment that's not just precedented. Like there's just too much uncertainty, too much volatility going on in the markets. Now, taking a look at the RBNZ, like I said, the expected cut rates, and then we have the US data, which I'll be closely looking at next week. So let's just jump into our currency analysis and take a look at things one by one. I'm going to just quickly glide through the cryptos. Like I said, I'm not interested. You can see everything sort of in a downtrend. Shorter term, not a whole lot of velocity. So not really a good time to be in the crypto markets. Let's just jump into currency markets here, and then let's just start with the good old US dollar. So dollar is actually the one that was confusing because you can see that dollar overall in the last month hasn't done anything. And we got that big break lower, and that was after those tariffs were announced. Tariffs were announced on April the 2nd, and overnight, we had a massive move down. And then here we are, we have a bullish engulfing candle right here. So we're kind of like right back in the range here in the dollar. Dollar, again, is not the best moving. I mean, we had a good move in the last 2 days, but if you're looking for a direction, that's going to be hard to kind of know for. I mean, this is not giving us a good direction. There's velocity there. There's a lot, definitely movement there, but not really have a direction yet. Now we have the Japanese yen, which again, acting as a nice safe haven currency. Remember, we talk about during these extreme, sort of a risk environment. That's where we see a flight towards safety. So yen does well. I mean, take a look at Swiss franc. Swiss franc just blasted higher onto those highs here. So that's another massive break that took place on that on the daily chart on the currency basket. So overall, these currencies did well. We have seen euro actually did really well. We had the pound. I think pound was more mixed. And looking at Canada, so I mean, Canadian dollar finally broke out. So on the tariff list, the Canada and the Mexico was not included. So because of that really caused a lot of alleviation because remember, Trump is all about or has been more focusing on Canada and Mexico. So that was a bit of a relief for the Canadian dollar, and we've seen Canadian dollar did well since then. And then here we are with the Australian dollar. As you can see, this thing was sideways for the last few weeks. And here we are, massive plunge lower. So everything is going to be looking pretty bearish. Extreme readings here. And same thing with the Kiwi. We got a nice little break, extreme readings to the downside. So looking at this, let's just jump right into the charts because I think that's where we need to focus on because how the charts are kind of looking. Here we are.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
This is the S&P 500. You can see there's just not a whole lot of buying coming in. You've seen every rally has been sold. This is the kind of price action that we have in the markets during the day. That's a pretty bearish price action. So I want everybody to take a look at 2024. And this is, again, when was the last time we had a massive sort of volatility in the broader markets and even in the currency markets all over? I think that was the August the 5th. So you see like how negative it was. And then we saw the market opened up over the weekend, like on Sunday night, we saw a massive move down. And after that, we just got a nice little, carve out a bottom. Is this how it's going to work out this time? Again, who knows? But I just wanted to prepare everybody that as you take a look at these extreme levels, this is where, things can definitely run longer than what you anticipate. But these are like really extreme bearish readings. I mean, this is not the first time we're seeing that. We've seen that before in the past as well. But usually that would, capitulate where you got a big bullish engulfing candle and then price start to move higher from there on. So if you're looking for, any reversal trends, then we need to see that capitulation takes place. And based on the chart right now, I'm not really seeing a capitulation in the markets. So that's the first thing we'll be taking a look at in the currency market as they and the broader markets as they open up on Sunday night. Now, taking a look at some of the historical charts, like I said, like Swiss franc. Let's just start with that one. Again, massive move. Again, if you look at things on daily chart, you'll notice that, it just won't really give you greatest technical setup. Everything was normal. And then, you have a huge blip over here. So remember what happened last year. That was the August 5th, 2024. We saw something similar. You see how it was kind of rising and rising. And this is what we call capitulation, where, we started off, it was a lot stronger than but erased all those gains. And after that, it just caused a nice little move down. This is what we have a good example of a capitulation. So even last year, we saw something similar. Here we are, Japanese yen. You can see got a nice little capitulation top before the prices turn here. So I think that's really where we are. The volatility remains extreme. So this is the, like I said, you can take a look at VIX. And you can take a look at VIX right now. You can see this is just sitting at the highest level in months. I mean, this is what you're dealing with. I mean, this is where, if you're looking at markets and say, well, this looks odd, or this is moving way too fast. I mean, this is the reason why the volatility just in the market is too high. So this is where, you get a lot of these one-way trades. And I must say that, like, as things plunged, it was decent setups, like here's the price action last night, we started to break lower and we just kept breaking lower. And then, like I said, this morning we had that China retaliatory tariffs, and then that caused another big move down. So again, right now, everything is looking very extreme. So does it make sense to kind of go in that continuation pattern? No, I think everything's sort of looking extreme. You don't want to get caught up in those tops and bottoms. You want to let those top and bottoms kind of work out on its own and then see if you get a nice reversal pattern off of it. And in those reversal patterns, remember daily is going to show you a downtrend, but then we're going to start to see momentum sort of shift in a 4-hour chart and an hourly chart. So, those are the ones that I will be taking a closely look at. But as far as the currency baskets go, I mean, we are, like I said, we are sitting at these, extreme levels here. Here we are with the Aussie. We've been sideways for the most part in the last 4 or 5 years. As you can see, this thing is moving like this. Same thing with the Kiwi. I mean, Kiwi, I would say is outperformed. Had a lesser percentage move compared to the Aussie, but I mean, technically speaking, they kind of look very similar. So this is really where you want to be, and when those things reverse. You take a look at pairs like Euro Aussie, you can see that these things just took off. I mean, this is a beautiful little setup here. Here's a 4-hour chart you can see. So right now, that's what, like technically those are the setups. That's where everything is. But, they are eventually going to stop as the market changes direction, So we'll find out what happened next week and make adjustments. But right now, as you can see that these are massive percentage moves. So you might have to sort of, this will be very difficult to trade on a daily chart because, you're looking at hundreds of pips to really set your stop at. So you have to really, base your time frame on like an 4-hour to an hourly chart and see you get a nice little setup over there. That's really where we are. If the markets gets better, then we probably see a reversal of what we're seeing this week, where yen will sort of back off. We see the Swiss franc will back off, and then the dollar will sort of back off as well. And then the money probably will go into some of those, battered currencies like Aussie and Kiwi. If we continue with this rhetoric, I think we'll probably see a continuation of this until, like I said, the prices capitulate. So again, going into next week, we'll be again looking for this volatility to come down. As much as the volatility sounds fun, but again, this is where it's not everyone's cup of tea. Things are moving really fast, ranges are wide, and that's where you can, get in and, out of a trade very fast, and you can accumulate losses very fast. And this is the kind of environment that you got to really be a little bit more careful about. Again, looking for the volatility sort of calm down a little bit, and then see some market capitulation to come in as well. Overall, just be cautious. Stay focused on that relative sort of weakness, and try to be on the sideline if the markets are not moving the way where you feel more comfortable. Let the market sort of settle down, calm down. And I think that's going to provide some good opportunities on those recovery efforts. So that's the game plan. Keep a close eye on markets. Keep a close eye on currencies. Keep a close eye on the news because a lot of the movements are happening all around it. So enjoy your weekend ahead. And again, be careful on Sunday night. We'll want to see how the markets open, and we'll go from there. Thanks, everyone. Happy weekend.